Hello all. So this video is for my friends in India, who has this common question like how do people invest in U.S. stocks, which has been doing tremendously well in the last couple of years or even last 5 years in terms of returns, and how to diversify their investments in global assets, global equities, and even look at some other emerging markets with fast growth like China and Europe and Latin America like Brazil. How do one diversify and get into the global investments? And so I decided to make a video just to illustrate the how what are different ways to invest in global equities, and what are the funds and that are offering, and how one can directly look at investing in stocks like Google, Alphabet, Amazon. So let's get into that and understand the process. So here is a slide where which talks about different ways to approach investing globally. So we have Indian investors are allowed up to invest up to 250K per month in terms of dollars in international stocks under the Reserve Bank of India's, that's a central bank, India's liberalized remittance scheme. It's called LRS. And one can transfer money to the foreign broker through domestic funds and banks. And one can visit the branch, like the leading banks like ICICI Bank, HDFC Bank, and fill out this A2 form for outward remittance in terms of dollars. Now there are two broad aspects to invest in US stocks. Especially I'm focusing on US stocks because many ADRs are available to diversify even in US exchanges. So the first way is indirect way to invest in US stocks, that is through mutual funds and ETFs in India. So for starters, or people who don't have exposure to international markets or don't have the time or ability to analyze tech stocks, for example, which is dominant in US. And the best way to do is mimic Nasdaq index. Nasdaq is the underlying technology index through any of the existing funds in India. Now, for investments in US focused mutual funds in India, there is no limit for Indian residents as investments are made domestically or locally. So you can invest in international mutual funds or international fund of funds and invest in INR, which is Indian rupee, in India itself. So you don't have to go out to this remittance and whole dollar conversion transfer mechanisms. So here are three or four funds which I have shortlisted, not any sort of final sacrosanct list, but more of illustrative purpose which you can consider as a short list. So you have the first one, which is Motilal Oswal's Nasdaq 100 ETF G Growth Fund. So this fund, I think, recently launched, fairly new. When I checked down the history, so this fund mimics Nasdaq index performance and has returned 22% since launch. So it just mimics Nasdaq. So Nasdaq, I think, had returned 26% last year, 2019, if I'm not wrong. Now, so this fund is one strong, coming up from, we all know Motilal Oswal in India, so it's a very strong powerhouse in investment world. Then we have Parag Parikh long-term equity fund, which is PPLTEF. Been running since long. I think this fund is again India-based fund, which with global focus. So this is not mimicking any underlying index in US. It's more of a complementary additional stocks that is global facing. So they have a 35 percentage, up to 35 percentage of the portfolio invested in global equities, primarily US, what I can see. They have all the FANG stocks, I think, Facebook, Amazon, not Netflix. I could see Facebook, Amazon, Alphabet in their holdings, and also probably they have Suzuki, which is Japanese-based parent company of Maruti in India. So these are the international stocks they hold in their portfolio. Pretty large allocation, 9 to 10% of the fund, and the fund has done decent, well, 12.8, 13% CAGR, pretty good returns, and they have 65% domestic exposure. And India has been underperforming since last 2 3 years in stocks domestically, and precisely maybe that's a reason why the portfolio returns is not exceeded 15%. But however, India might do well ahead, so we'll have to wait and watch. But the point is, this fund has exposure to US stocks. Then you have Kotak Mahindra Bank's US equity fund. this is a pretty solid fund. I mean, this scheme has currently chosen to invest predominantly in units of PineBridge US Large Cap Research Enhanced Fund. That's an underlying fund. Now, although it says large cap US funds, their holdings are pretty strong in the top 10. Look at that fund exposure. It has Microsoft 6.5 percentage, a phenomenal grower in the last 2 years, expected to grow even further ahead because of their cloud story and the team, Microsoft team, which is strong competitor for Zoom, and the whole remote culture. Cloud is going to be big. So Microsoft and then Apple, solid firms. Amazon, which is going to do really well, which has been doing well during this 2020, during the lockdown. The e-commerce sales is kicking. The cloud business is growing like anything. Alphabet, again, another great player. Berkshire, then you have Visa, Intel, Merck, AT&T, Mastercard, another great firm which has been growing significantly well. So this fund has returned pretty well in the last. Their history is good. The PineBridge Capital US Large Cap Research Fund. Then you have First Global Sec, that has an international fund based out of Cayman Islands called the Global Freedom. Let me check. Freedom Fund, GFF. So the GFF is a global asset allocation fund which has diversified investment across the world, across the market classes, as US, Europe, emerging markets. Now in equity, they have, so their strength, I believe, is asset allocation has done pretty well since inception. They have good, well diversified asset allocation in terms of REITs, commodities, metals, fixed income, equity, emerging markets. Well, I mean, developed markets, everything is there in the portfolio. So this fund, GFF, has actually returned 14.5%, great growth since inception. And so that is another fund I could see. Then we have direct investing in US stocks, because most of folks in India might already be knowing indirect way through the funds, but which are the direct ways? So you have brokerages. A large number of Indian brokerages have tied with foreign brokerages to facilitate investment in foreign stocks. Now you can open an account for foreign stocks through them. So Indian brokerages, some of them highlighted are HDFC Securities has a tie-up with Stockel, a New York headquartered global investment platform that's probably SEC approved. Then you have ICICI Securities and Axis, both leading private banks in India, have a tie-up with Saxo Bank, and so so these are custodians probably, and they have they are SEC registered, and they might be protected as well. So this is a good way to open an international brokerage account in tie-up with an international brokerage house or a custodian. Then there is US based brokerages, Interactive Brokerages, which is pretty famous in US, since many of the folks use Interactive because of their low fees or zero fees, and brokerage commissions are very low. So Interactive Brokerage is very good platform also. It's a leading one in US for that matter. And but I am hearing that when I did the research, that their charge is slightly higher when they do overseas foreign accounts transactions. Now Vested is US Securities and Exchange Commission SEC registered investment advisor that helps investors invest in US stocks and ETFs. So again, another one for investing in US stocks. So Vested is, I went through their website, looks, I haven't used myself, but Vested seems to be pretty good custodian tie-up. They have partnered with Drive Wealth for custodian tie-up, which is SEC approved. Vested is apparently insured by SIPC, Securities Investor Protection Corporation, and so there is a investment insurance protection for the through SIPC, which is good. So Vested seems to be a good platform when one can invest directly in stocks. There's the only platform I could see when someone can directly invest in stocks, like even in fractional shares, which is interesting because only Robinhood and some platforms that offers fractional shares investments for us in domestic platforms in US. So this seems to be a good platform. Probably one can do more research on that. Now, things to be considered and analyzed, with your portfolio advisors is look at the forex currency risk when you invest in, US and Europe and other foreign funds, and foreign currency fluctuations can be a deterrent for your returns. and so hedging might be required. Some investment advisors can help with that. And taxation, no, to avoid double taxation, some countries might mandate taxation locally if you sell it here, especially in US. So you might have to work through with your tax advisors for this as well. So this is the way somebody can look at expanding and diversifying your investments to globally. And there could be other ways also, might not be covered here, so maybe you can research more in detail. But trust me, asset allocation is very critical, and diversifying into global equities will definitely give that returns when some countries are performing better over others in the long term. So it's a good idea to diversify through funds, if not directly in stocks. Hope this was helpful. Thank you.